Have you ever seen a man who lost $6 billion in just one day and didn't lose his mind? Not only did Michael Saylor did not go crazy, he returned 20 years later with the craziest financial strategy of the 21st century. He took an ordinary software company and turned it into a Bitcoin tank, which today holds almost 1 million coins, being the largest holder of Bitcoin after Satoshi Nakamoto. People hate him, people idolize him, but he doesn't leave anyone indifferent. Who is Michael Saylor, you may ask? If you're even a little bit interested in Bitcoin, you've heard that name before. A white man in his 60s, short hair, suit, speaking in calm, slightly metallic voice. Bitcoin is digital gold, Bitcoin is energy, Bitcoin is ethics. He repeats it like a mantra, and trillions of dollars of institutional capital believe him. But the path to this insane success did not begin in cryptocurrencies. So let's start from the beginning. Saylor was born in 1965 in Nebraska. His father was a military pilot who served in the United States Air Force, and the family moved from base to base: Oklahoma, Texas, California. A childhood without roots, but with an iron discipline. And this will play a huge role in the future. School, then the Massachusetts Institute of Technology, MIT. Saylor joined the aircraft industry. After MIT, he served in the US Air Force and he became an officer. Even more consistency, even more hierarchy. He wasn't a pilot, but rather an analytical engineer, but the army training has remained forever. He loves order, planning, and long-term horizons, and this is what will later allow him to hold Bitcoin when it drops by 70%, and the whole world was shouting, "I told you so." In 1989, at the age of 24, he founded MicroStrategy. The company was engaged in business analytics as software for data analysis. Customers, large corporations that want to understand their customers, and in the 90s, it sounded like magic. MicroStrategy grew, not fast but steady. Saylor turned out to be a talented seller of his idea, and he convinced the boards of directors that they were blind without his analytics, and gradually the company acquired customers at the level of McDonald's, Pfizer, and Coca-Cola. And it was a respectable, boring, but reliable software story. No Bitcoin, no craziness just yet. In 1998, MicroStrategy went public on Nasdaq. Stocks are rising. Saylor is a billionaire on paper. The end of the 90s, the dotcom boom. Technology is growing faster than revenue. Investors go crazy for any company with the word micro or strategy in the name, and at that time, Saylor feels like the king of the world. But then comes March of 2000, the dot-com bubble has burst and shares of technology companies have collapsed. But Saylor, he got a special punishment here. MicroStrategy has reviewed the financial statements for previous years, and it turns out that the company recognized revenue too aggressively, not according to SEC rules. Scandal follows and the news spread instantly. In just one day, MicroStrategy stocks plummeted from $313 per share to 45 cents, a 99.8% drop. Saylor's personal fortune has evaporated by $6 billion, yet again in just one day. And just imagine that you are a billionaire tonight and in the morning you are not even rich. The shareholders filed lawsuits, the press called him fraud, and he woke up and had to go to work. Most people in his place would probably broken down, went into shadows, handed over the company to creditors, but Saylor, he did not break. He remained CEO and he fought off lawsuits, restructured debts, and restored his reputation. The company survived, but its shares never approached triple digits again. For the next 20 years, MicroStrategy eked out a boring existence, profitable but slow. No growth, and Saylor was looking for a new big idea. He tried mobile analytics, cloud solutions, artificial intelligence, nothing took off, and the company turned into a cash carpet that simply generated money and kept it in the bank accounts. And now the year is 2020. Pandemic hits, Saylor is in Miami, quarantined in his house, and the whole world is printing money, and the US Federal Reserve turns on turbo mode. Trillions of dollars of fresh liquidity flood the markets. So Saylor looks at his balance, and MicroStrategy has $250 million, and he understands that this money is just melting away. Inflation eats them up in real time, and what can you do? Keeping cash means losing it. Buying shares of other companies, what's the point? They are also overheated. Maybe buying bonds, profitability is almost zero. And then he remembers Bitcoin, the one he called dying in 2013, and here's reconsidering his attitude and thoughts. He reads the white paper again, he looks at the halving mechanism and at the limited issue of 21 million coins and understands it is an ideal asset for an era of rampant money printing. So Saylor makes a decision that will be called insane. He takes all of MicroStrategy's free money, which is $250 million, mind you, and buys Bitcoin. Entry price approximately $11,000 per coin, and it was August of 2020. At first, the market did not understand what had happened. A small software company has converted its treasury reserve into the most volatile thing in the world. Analysts called it a gamble and a leap of faith, but Saylor, he did not care. The first purchase was followed by the second, then the third one, and Saylor realized that he could not just convert free cash, he could attract new capital specifically for the purchase of Bitcoin. How, you may ask? Through the sale of new shares and the issuance of convertible bonds. I will explain it in simple words. You issue bonds, debt secures, and you promise investors returns such as 0.75% per annum, and yes, profitability is ridiculous here, but you add convertibility. Under certain conditions, an investor can exchange bonds for shares of your company at a fixed price. And investors give you money, you take this money cheap, almost free, and buy Bitcoin. Bitcoin is growing, the value of your company is also growing, stocks are going up, investors are happy, and you issue new bonds and buy Bitcoin again, and then rinse and repeat. So basically, he transformed MicroStrategy from a software company into an investment machine that gives investors access to Bitcoin without having to buy Bitcoin directly. Don't want to mess with a cold wallet? Buy Strategy shares. So for 4 years, from 2020 to 2024, the company bought Bitcoin in just waves. It bought 11,000 per coin, then it was 20, then 40,000, and then 60. And when Bitcoin dropped to $16,000 after the collapse of the FTX exchange, Saylor continued to buy, and he publicly stated, "My strategy will withstand an 80 to 90% drop in Bitcoin." Today's strategy owns 818,869 Bitcoins. And so, just for you to understand the scale, Satoshi Nakamoto, the creator of Bitcoin, is estimated to own about 1 million coins. The value of the company's Bitcoins at the time of 2025 is approximately $47 billion, and this is a huge sum. But that's not the most interesting part. The most interesting part is that actually market capitalization of the strategy, it amounts to about $97 billion. Yep, you heard me right. The company's assets are worth $47 billion, and the company itself is worth $97 billion on the stock exchange. And that is, investors pay almost $2 per asset that is directly worth just $1. And it's called a premium, and it's huge, almost 100%. If you are just an ordinary person like I am, for example, you'll probably say that this is idiotic. Why pay $2 for something that can be bought for just $1? And Saylor's answer would be, because you can't borrow against Bitcoin, because you can't issue convertible bonds, because you are not creating the financial machine that generates capital to buy new Bitcoins on its own. Saylor's fans call this premium justified. Investors are not buying Bitcoin as a commodity, they buy Bitcoin, a financial engine that can attract cheap capital invested in Bitcoin and create excess returns. And it's like paying for a management company that knows how to make money out of thin air. Well, who is buying these shares, you may ask? The largest funds in the world. Capital Group is one of the giants of Wall Street. The Norwegian sovereign wealth wealth fund is the largest public fund in the world, BlackRock, Fidelity, these people are not stupid. They pay a premium because they believe in Saylor's strategy. Let's talk about how this strategy works with numbers. Basically, you issue preferred shares of Stretch at 10% per annum. Because of the high returns, investors are buying them up, and you take this money and you buy Bitcoin. Then Bitcoin has been growing by 30 to 40% per year on average in recent years, and the difference is your profit. And that is, you create value for the shareholders yourself. And the more Bitcoin grows, the more you can release new tools, because your collateral base or Bitcoins is getting more expensive. And the more tools you release, the more you buy Bitcoin, and the more you buy Bitcoin, the more pressure there is on the price, and this is a self-perpetuating cycle. Critics call it a Ponzi scheme, of course. Even CoffeeZilla recently had a video on this topic, but they all forget the main principle of Bitcoin. The supply is limited, and there will never be more than 21 million coins. And the main risk is debt leverage. Strategy has that if Bitcoin falls too low and for a long time, the company will have to sell coins to serve these loans. And if it starts selling, the price will drop even more, and this is called the liquidation spiral. Saylor publicly stated that the company would withstand a drop in Bitcoin by 80 to 90% from peak values, and this means that if Bitcoin worth $70,000, strategy will survive a drop to $7,000 to $14,000, but lower is the risk. Many people do not believe in such a scenario, but in crypto world, anything is possible at this point. The second risk is stock dilution. To buy Bitcoin, the company is consistently issuing new stocks and bonds, and each new issue dilutes the shares of existing shareholders. If you own 1% of the company today, tomorrow your share may become 0.9%. If Bitcoin is growing faster than dilution, you are in the black or green. If not, you are in the red. The third risk is regulatory. The SEC does not like it when companies turn into something they are not, and if regulators decide that strategy is not a software company but an investment fund, it's completely different rules and they might be imposed on it. Saylor responds to this: we sell software, we have clients, and yes, we do have Bitcoin, but that doesn't change the core business. And it sounds unconvincing to many people. In 2024, the company officially changed its name from MicroStrategy to just Strategy. It was symbolic, from micro to just strategy. It's like Saylor said, we're not small anymore. We are the strategy now. Bitcoin purchase strategy. Michael Saylor has become an icon. He has an army of haters who are waiting for the collapse, but also has an army of fans who call him the king. But most importantly, he never violated the main rule of Bitcoin. He did not sell, even when the price was falling. Even when the CNN analyst said his strategy was just crazy, he just keeps buying more and more. In interviews, he often repeats just one phrase: Bitcoin is the way out. The way out of what? Maybe it's from a system where states can print money without restrictions, maybe from a system where your savings are dwindling due to inflation, and from a system where financial intermediaries take a piece of your pie each time.
So the one network that you have that gives you a decent chance of owning your own money and then being able to spend it the way you want is Bitcoin.
And he doesn't hide his mishaps. He also posts dozens of tweets a day about Bitcoin on X, charts, quotes from Satoshi, comparisons with gold and real estate. He is not just an investor, he is a preacher. And many compare him to Elon Musk, only without rockets and with one asset. Saylor's influence on the crypto industry cannot be overestimated. Before him, institutional investors treated Bitcoin as a toy for geeks and money launderers, and after him, they realized that Bitcoin can be a corporate backup tool, and he breathed new life into the idea of hodl, to hold, not to trade. After strategy, hundreds of public companies around the world began buying Bitcoin into their treasuries. Block, Tesla, Semler Scientific, Metaplanet from Japan, they all refer to Saylor as a pioneer. He created a template which is now being copied. But anywho, back to the main paradox. If Bitcoin is digital gold, then it will grow 10 times in 10 years, then Saylor is a genius who created a company that will be worth trillions. If Bitcoin collapses to zero, and many economists this is still possible, then Saylor will go down in history as the man who destroyed hundreds of billions of dollars of equity. And you know what? He understands it himself and he doesn't care. There is no doubt in his voice. He talks about Bitcoin as if he were describing the law of gravity. And there is no I think, but it's a fact. A confidence that borders on fanatism, and that's what makes people believe him and invest money.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay, what's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? There's no second best, okay?
And speaking of money, Saylor's personal fortune is estimated at about $2 or $3 billion today. He's not the richest man in the world or even in crypto, but he's very influential because he didn't just make money, he changed the way corporations look at Bitcoin. And I think he will still be in like top 100 and maybe even top 5 richest people. And there is one interview that best describes his character.
I lived through seeing our stock go to 333 and I watched it go to 42 cents.
And that's the essence of Michael Saylor. He was already at the bottom. He went through public destruction, through courts, through stock drop to 45 cents, and he got up. He didn't just get up, he came back with the most audacious strategy Wall Street had ever seen. And I think that's why the haters don't bother him. That's why he doesn't respond to critics. He just knows that if Bitcoin collapses, he will simply lose everything for the second time. And he had already dealt with this, and if Bitcoin continues to grow, he will become a legend that has overtaken everybody. You know what? Michael Saylor is probably not just an investor, he's an ideology. This is the man who turned Bitcoin from speculative asset for retail traders into corporate reserve instrument. He created a financial experiment that has no analogies in the whole history of public companies. If you believe in Bitcoin, you applaud Saylor. If you doubt Bitcoin, you consider him a dangerous lunatic, and there is no third option. And it is this polarity specifically that makes him a figure that cannot be ignored. In just 5 years, he turned a boring software company with $250 million in cash into a Bitcoin giant with assets under $50 billion and capitalization under $100 billion. He forced Wall Street to talk about Bitcoin in its own language, the language of debt instrument, dilution, premiums, and convertible bonds. Anyone else in his place would have sold everything when Bitcoin grew 5 times. He didn't. Anyone else would have stopped when the press started calling his strategy madness. He didn't. Anyone else would have diversified: gold, real estate, stocks. He only has Bitcoin, one asset, faith, and bet.